السلام عليكم ورحمة الله وبركاته. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. Today we are going to present our topic, accounting and Sharia compliance practice in Islamic financial institution, for the subject BAM 4043 Islamic accounting, a case analysis of Islamic financing, zakat accounting, and also Sharia governance. Uh, our group members, my name is Yusuf Medin Abiola, and also we have Author Muhammad Abdul Rabib Shamsan, and also we have Alexa Muhammad Qasim Ghalib, and also we have Ibn al Qayyim Abdullah Usman, and also we have Ahmad Khalid Abu Sa'id Al Muraish. Inshallah subhanahu wa ta'ala, I'm going to start the presentation from the introduction. When we are talking about Islamic financial institutions, so as we know that we have financial institutions that are working based on the conventional principles, but the word Islamic that is included in the front of these financial institutions so indicate that these kind of institutions they operate based on Sharia principles. So and also Islamic finance, as we already know, must be guided by the Sharia principle, and the Sharia principle prohibits what is called riba, goro, and maisi, and also Islamic accounting, so it ensures transparency. Also, it ensures accountability to Allah subhanahu wa ta'ala. And the bank that we are presenting for, which is Baraka Islamic Bank Barat, they provide Sharia compliant financing products. So the bank established governance mechanism to ensure compliance with Sharia principles. Definition of Islamic accounting. Islamic accounting refers to recording and reporting financial transactions according to Sharia principle. So, as you already know, that accounting is the recording and reporting of financial transaction. But the word Islamic that is in front of the accounting, so included that it must comply with Sharia principle. And also, it integrates ethical value with accounting practice, focus on justice, which is adala, and also fairness, which is ad, and also transparency, and also accountability to Allah subhanahu wa ta'ala. So Islamic accounting it also includes disclosure of zakat, prohibited income, and social responsibilities. So and also the accountability of the Islamic accounting is toward Allah subhanahu wa ta'ala and also the society at large. When we are talking about the objective when we are talking about the objective of Islamic accounting, so Islamic accounting has many objectives, but we are going to list maybe 5 or 6 objectives in our presentation. First is that Islamic accounting it ensures Sharia compliance in all financial activities. So in the sense that every financial activities that is going to take place must what? Must comply with Sharia principle. There must be no interest, there must be no borrow, there must be no mercy. Also, it must be transparency, it must involve justice and also fairness. The second objective of Islamic accounting is to promote accountability and ethical behavior. So first of all, to promote accountability, so as a Muslim, you have to know that every actions, every part of our actions is accountable to who? It's accountable to Allah subhanahu wa ta'ala. And also ethical behavior. So how to behave with another people at mu'amala. So the ethical behavior must be what? Must be very good. In the sense that, for example, the conventional banking that are including interest in their loan. So it will be that it is more or less like taking property of another people. So which Islamic principle and Sharia principle prohibited us from doing such act and behavior. And also it protects stakeholders' interest. And also it supports fair wealth distribution through zakat. So in the sense that uh, the rich will take 2.5% out of their money that has already reached nisab according to Sharia principle. So they will give it to the poor. So with that, with zakat process, and it will make the poor to what to be also rich, in the sense that after they collect zakat, they can use it to establish their own business, they can use it for their living, they can use it for their survival, and so on and so forth. And also we have enhanced financial decision making. So it helps us to make decisions clearly and with justice, with fairness, with transparency, and also with accountability to Allah subhanahu wa ta'ala. And also it encourages transparency and integrity. So these are the small out of the plenty objective of Islamic accounting. We have the importance and comparison of Islamic accounting. So what are the importance of Islamic accounting? First of all, Islamic accounting is its standardized financial reporting. So it makes the financial reporting to be standard, to be in line with Sharia principle. And also it enhance stakeholder confidence. So for example, I know that the business I want to enter now, so I will gain. So nobody can take my words unjustly. Nobody can do zulmu for me. So I will be very confident to what to enter into such a business. I'll be very confident to invest in such a business. So in that place, it also enhance stakeholder confidence. And also the third one is what? It improve transparency and also disclosure. So when we are talking about the comparison, so comparison with conventional accounting. So Islamic accounting is a Sharia base. So why conventional accounting focus on what? Focus on profit maximization. So they didn't have any law. Their own main goal is what? Is to make profit. So they didn't care whether the profit they are making is a form of hardship or difficulty to another person. No, they will just try to what? To make their own profit. So and also Islamic accounting prohibits interest, which is riba. So but conventional accounting, so they use any kind of process or any kind of tools to what? To generate their own profit. And also Islamic accounting, it promotes social welfare, but conventional accounting, so it only focus on the person that want to gain. So that's the short few points about the comparison between Islamic accounting and conventional accounting. So I will pass the presentation to the next presenter. So we start the presentation from the next slide. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Khattab Muhammad Abdul Raqib Shamsan. I'm gonna present the next slide, which is Mudaraba financing. So, what is Mudaraba? Mudaraba is a partnership between two parties. One party provides the capital, while the other party manages the business. So, the profits are shared according to an agreed ratio between both parties. If there is a loss, it is usually borne by the capital provider unless negligence occurs. So, Mudaraba is based on trust, cooperation, and profit sharing principles. It also encourages entrepreneurship and investment in a Sharia compliant manner. Now, I will explain the accounting treatment of Mudaraba. So, in Islamic accounting, Mudaraba financing is recognized as an investment asset because the bank provides funds to the entrepreneur for business activities. So profits are recognized when they are realized or can be measured reliably. So this ensures that the financial statements provide accurate information. If a loss occurs, it must be recognized in the accounting records when it is occurred. So Islamic financial institutions are also required to disclose information about profit sharing arrangements and any related risks. So this helps improve transparency and accountability. So the accounting treatment of Mudaraba is guided by AAO IFI Financial Accounting Standard Number 3, which provides guidance for recording any reporting Mudaraba transactions. Next, I will explain Musharaka financing. So, Musharaka is a joint partnership financing arrangement where two or more parties contribute capital to a business or investment project. Unlike Mudaraba, all partners in Musharaka participate by providing capital, so the profits are shared according to an agreed ratio between the partners. However, any losses must be shared according to each partner's capital contribution. So, Musharaka promotes cooperation, shared responsibility, and risk sharing among all partners. This financing method is widely used in Islamic financing because it follows the principles of fairness and partnership while avoiding interest based transactions. In this slide, I will discuss the accounting treatment and risk of Musharaka financing. From an accounting perspective, the capital contributed by each partner is recorded as an investment in the partnership. So, profits are recognized and distributed according to the agreed profit sharing ratio between the partners. However, Musharaka financing also involves several risks. The first is business risk, which may occur due to poor business performance or unfavorable market conditions. The second is partner risk, which may arise if one partner fails to fulfill their responsibilities. The third is liquidity risk, where the institution may face difficulties in obtaining cash when needed. And finally, there is operational risk, which may result from internal errors, weak process, or system failures. So, to ensure proper accounting and reporting, Musharaka financing is guided by AAO IFI, Financial Accounting Standard Number 4. So that's all for me. I will move to the next presenter.
Assalamu alaikum wa rahmatullahi wa barakatuh. Inshallah, I will talk about Murabaha financing. Murabaha is an Islamic financing method where the bank buys an asset and sells it to the customers at as disclosed profit margin. It's widely used in Islamic banking because it's follow Sharia rules and Sharia principles and avoid interest riba. As here, you see, we have Murabaha contract and bank branch and profit marriage widely used for. And in this slide, it's talking about accounting treatment of Murabaha. In Mudaraba financing, the assets is first recorded at its purchase cost. The profit is recognized over the financing period, and a receivable is recorded after the sale to the customers. The accounting treatment follow AIU Avas No 25, 28, sorry, and as you can see here, it is assets entirely recorded at the acquisition cost and also the other financing period after the after sale to customers. This important receivable recognized, and this one requires disclosed of profit marriage. And in this slide is Igara financing. We can say Igara is an Islamic leasing contract where the bank owns the assets and leases it to the customer. So the customers here pays rental installments while the bank retains ownership. The listed assets must be halal and list terms must be clearly agreed upon. So here it must be by igara in halal way. We can do it in Islamic banking or professional financing. So, and this slide show accounting treatments and risk of ijara. So, under ijara, the listed assets remains on the bank's balance sheet and rental income is recognized periodically. Key risk include assets risk, credit risk, maintenance risk, and Shariah and compliance risk. The accounting treatment is governed by AAOIFEI. So we have here the accounting treatment is assets remains rental incoming. For the risk, we have asset risk and maintenance risk and the credit risk, Sharia and compliance. So this is IGARA financing, ensuring access to assets without ownership transfer. So the promotes economic activity and maintains Sharia compliance with proper risk management and accounting. Thank you so much.
Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. First of all, my name is Ibn Qayyim Abdullah. I'm going to continue from where my colleague stops. For this slide, I'm going to talk about Zakat accounting analysis. This slide shows the Zakat accounting analysis. The company's current asset is 90 million ringgit, while the current liabilities are 20 million. To calculate the net zakatable assets, we subtract the current liabilities from the current assets. Therefore, 90 million minus 20 million equals to 70 million. This means the company's net zakatable assets is 70 million. We go to the next slide, which is slide number 15, zakat payable calculation. This slide explains how the zakat payable is calculated. The zakat rate is 2.5%. We multiply the net zakatable assets of 70 million by 2.5%. The calculation gives 1.75 million. Therefore, the total zakat payable is 1.7 million. And we go to the next slide, which is slide number 16. Importance of zakat accounting. This slide highlights the importance of the zakat accounting. First, it helps Muslims fulfill their religious obligations. Second, it promotes social justice by supporting those in need. Third, it reduces poverty and inequality through the distribution of wealth. It also enhances corporate social responsibility and improves public confidence in Islamic financial institutions. Overall, zakat accounting benefits both society and the economy. And for the last of my part is Zakat versus taxation. Zakat it includes religious obligation, one, fixed rate, which is the percentage, and promotes purification and welfare. Zakat includes spiritual accountability to Allah, while taxation is legal obligation, variable rates, and supports government expenditure. That's all from me. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh. Thank you.
Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Amjad Khalid Al Muraish, and I will be explaining the next slides. First, we have Sharia Supervisory Board. Now, I will explain the role of Sharia Supervisory Board, as you know, or SSB. The SSB is responsible for ensuring that all activities and products of an Islamic financial institution comply with Islamic principles and Sharia requirements. The board reviews and approves Islamic financial products before they are introduced to customers. It also issue Sharia rulings and fatwas when necessary and provide guidance to management on Sharia related matters. In addition, the SSB reviews annual Sharia compliance reports to ensure the institution continues to operate according to Islamic values. Then we're moving to the next slide. You see here internal Sharia review and external audit. This slide has two important monitoring mechanisms: internal Sharia review and external audit. Internal Sharia review focuses on examining transactions, operations, and procedures to ensure they follow Sharia requirements. It also helps identify any potential non-compliance issues early. On the other hand, external audit is conducted independently to verify transparency, accountability, and accuracy of Islamic financial reports. Together, these functions strengthen public confidence and ensure the institution maintains high standards of governance. And here with the next slide, we see the challenges faced in auditing IFIs. Although auditing Islamic financial institution is important, there are several challenges. First, Islamic financial contracts are often complex and require specialized knowledge. There is also a lack of standardization uh, because different countries may apply different Sharia rules, as we say. Another challenge is shortage of qualified Sharia auditors. In addition, institutions face risks of Sharia non-compliance, which can affect their reputation. Finally, rapid technical changes and cybersecurity threats create new challenges for auditors. And then the last, uh, then we have in the last slides recommendation and conclusion. To improve auditing and governance in Islamic financial institutions, several recommendations can be implemented. First, institutions should strengthen Sharia training programs to develop skilled professionals. Second, internal audit systems uh, should be improved to detect issues more effectively. Third, transparency and disclosure should be enhanced to build stakeholder trust. Institutions should also strengthen risk management frameworks and fully adopt AA or IFI standards to ensure consistency and best practices across the industry. And then we have here the conclusion. Islamic accounting and Sharia governance play a crucial role in ensuring transparency, ethical conduct, and accountability in Islamic financial institutions. Effective Sharia supervision, auditing, and governance mechanisms help maintain public confidence and support sustainable growth. Therefore, continuous improvement in governance practices is essential for future development of Islamic financial industry. Thank you for listening.